What's up, guys? Matt Voke. I got the beauty, the privilege of meeting Miss Cathie Wood here. She is awesome. She did a talk at the Bitcoin and Blockchain Summit this week. So I'm going to show you a little bit of her talk on inflation. I'm going to give my perspectives on her perspectives on inflation and a little bit of my own. And then I'm going to talk about crypto. How big can crypto be? What is the goal? With some of her comments when I asked her about it, and then some of my comments layered on top of her comments. Stick around, watch.
My background is in both economics and finance, Art Laffer Heard, and all of that. So I think about economics all the time. And I also, as an investor in innovation, say, okay, what are the headlines blaring right now? Inflation, inflation, inflation. And the numbers coming out are kind of shocking. I will give you that. And we knew that inflation was going to be coming out of the coronavirus, supply chain, base effect, that's done, the base effect, but supply chain, I never expected hoarding to now be taking place because of fear of not getting holiday presents, right? So we've got a lot of short-term dynamics that are pushing prices up, but I'm gonna harken back to the Yassine's apartment, right? And if you look at millennials, what could be happening is, sure, as they grow wealthier, they'll buy goods and services, which is what GDP measures, but maybe digital assets and other assets, equities and so forth, I've never seen a generation like this, actually. And what we're seeing is that GDP probably disappointing. In the third quarter, GDP growth was 2%, much lower than expected. All of that was because of inventories, which is, everybody's screaming about inventory, so I found that interesting. Real final sales were slightly down. And I'm beginning to think, could it be, if you have the excessive money out there moving into assets, so stocks, bonds, crypto, housing, if you call that an asset, some people do, some people don't, then it's not going into GDP, which is where you find the measure of inflation, right? And so the velocity of money is going down. It's not being turned over into goods and services 5 times a year. It's going down, and it has been going down since 08, 09. Whereas before, in the 70s, it was going up consistently because people were watching inflation go up and interest rates go up, and they said, let me buy now before they go high, prices go higher. Let me buy now before interest rates go higher. Now, we might have a little bit of that going on right now, but it's not pervasive. So that's the thinking here. This is this idea that the velocity of money is coming down, and this new generation, the millennials, in fact, in the 80s, so I'm a boomer, right? And in the 80s, a strategist called Stan Salvigson from Merrill Lynch, he's not with us anymore, but he was great, made one call. The call was, baby boomers have entered their careers for the first time. We're going to be in the bull market for the next 20 years. And he was right. Yeah, we had our interruptions, but he was right. And it was because of the baby boomers. Well, now we're in the echo of the baby boom, the millennials. And we have a person, you may know him because he's very involved in the crypto world, Tom Lee from Fundstrat. He is making the call that we are in a bull market. Now he's making this call on equities, but I'd say other assets as well, especially crypto, because the millennials have entered their better earning years, and he does not expect the bull market to end until the number of millennials starts to drop. And that, I think, is in 2038. So that's kind of crazy, isn't it? So it's an echo of what happened in the 80s and 90s. And and that period of time, as you know, is when inflation came down. And it was for that reason.
This departs a little bit from what she previously talked about for expecting deflation coming out of COVID. And I think there's a little bit of nuance to her comments. One, she just flat out acknowledges that the inflation has been running hot and we've seen several month prints above 5%. So what does that mean is we're seeing a demand for goods and services that are outstripping supply. that's as simple as it is. And the main thing that we're seeing is the disruption in the supply chain of a lot of that, specifically coming from China. And she's really worried that disruption in China isn't going to be as much of a factor. It's basically going to cure itself as well as go into a slowdown. So expecting China to slow just like Japan did decades ago. That's optimistic from our perspective. It'll see a decrease in demand for things, and then imagining that the supply kind of rights itself, and we don't see, the amount of ships that we see parked off the coast of California right now. But that's important. Those cyclical factors are very important to her. She basically breaks it down into the cyclical and the secular, if you will. Cyclical factors are those that are tied to the economy. She talked about the CPI and assets and inflation and cryptocurrency, for instance. So the economy getting more robust coming out of COVID lockdowns is going to see growth in CPI and in assets, but it's not going to be as significant in those goods and services that many choose to measure actual GDP and inflation, specifically in the CPI, which is interesting. And she also talks about the velocity of money decreasing. And we've seen it drastically fall off a cliff since 2008, 2009. Even with the massive amounts, trillions of dollars of printing of money, the massive amounts of bond purchases, etc., we just see the velocity of money just falling off a cliff. People are not spending what they used to be spending. So the dollar is not circulating through that economy as fast. Moving into the secular motivations, those are what we see from innovation. And if you know anything about Cathie Wood and ARK Invest, often talking about AI training costs coming down. Huge benefits there that you see from AI integration into companies. Electric vehicle sales, she's been on Tesla as one example. There's not going to be those people purchasing those cars the way that they used to be. They're going to be either seeking mass transit or switching to some of those more renewable vehicles in EV, etc. Genomics costs are going down significantly. And then blockchain, what I care about from her mentioning the most is how big blockchain is going to be here. So Cathie Wood believes that is one of the 5 driving forces of innovation, and it's growing huge. So not even talking about hedges against inflation for Bitcoin and Ethereum, but just looking at it as an ability to produce efficiencies and to drive production in the economy. That's where she sees a lot of that value coming out of blockchain, more than just a hedge against inflation. So I asked her at the conference specifically, and she mentions examples of writing the prospectus on Bitcoin, and then having Art Laffer review it. And she says, "How big can this be?" And Art Laffer says, "What's the U.S. monetary base?" I think that's short-sighted. I think that Bitcoin specifically and crypto overall can be much larger than the U.S. monetary base, because crypto is much larger than the U.S. monetary base. It just hasn't been realized yet. We're still nascent in this technology. People are still building on it. So Bitcoin still going to grow huge because it is that golden standard, if you will, but it is not a replacement for gold. Having it be a digital gold and a replacement of gold is short-sighted. Bitcoin is capable of so much more than that. And if you listen to a bunch of people on YouTube or elsewhere, Raul and Mike and a bunch of others going over that, it has so much more potential as a property, as an asset, as everything, the internet, money, everything more than gold. And then you have Ethereum on there, which is basically the world computer. Zuckerberg's talking about the metaverse. I think people are going to trust the decentralized metaverse a lot more than the meta Facebook metaverse. Time will tell. Maybe it's going to be both. There's going to be the corporate, there's going to be the private, there's going to be the decentralized, and that's the beauty of the metaverse. 1, you can't stop people from building on it, and 2, it's going to be for the people to decide where they go, where they bring their assets, how they interact with each other, and we haven't even figured out how big this can be yet. It is early days. The future is bright. This is Matt Voke. See ya.